In this video, we'll look at common Forex terms. Let's take a closer look at what we will cover. We'll start by looking at technical analysis. We'll then move on to fundamental analysis. We'll look at the differences between the two. We'll also look at speculators and investors. In this part, we'll look at trade duration and how it determines what type of trader you are. So let's get started. We'll start with technical analysis. Traders that use technical analysis make up about 95% of all traders out there. This involves analyzing charts to determine exact entry and exit points. It usually involves the use of standard and custom indicators, line drawing tools, price action, support and resistance areas, candlestick patterns, to name a few. The focus is on the charts. Trading decisions are based on the outcomes of chart analysis. Nearly all small timeframe traders are technical traders, because trading the daily timeframe or less means traders rely heavily on their charts to help make trading decisions. Now, the opposite of a technical trader is a fundamental trader. Fundamental traders make up about 5% of all traders out there. Traders that practice this method rely heavily on current events to aid in making decisions on what to trade and what positions to take. This usually involves looking at geopolitical news, potential natural disasters, shortages of natural resources, and other non-chart related topics. This helps determine the strength or weakness of a country's currency, and in turn, the traders can make their trade entries or their trade decisions. This type of trading tends to be a lot slower, and traders who trade this way often hold on to their positions for a much longer period of time. Trades can remain open for weeks or months at a time. The key focus over here with fundamental analysis is that traders are not using their charts. Every once in a while, a fundamental trader will look at a chart, but the decision on whether to enter the trade or to exit the trade is not made based on the information gathered from the chart. Now let's look at speculators and investors. We have a number of different types of traders, and the different types of traders means different duration of trades. Let's start and look at speculators. These are short-term traders. The first type of trader is a scalper. These types of trades last for a few minutes. If you are a scalper, you're entering a trade on a very small time frame, and you're usually holding on to your position for just a few minutes. Scalping trades can last anywhere from 1 minute to 10 minutes, maybe 15 minutes at most. Scalpers usually aim for just a couple of pips per trade, and you'll also find that scalpers will make numerous trades, far more than any other type of trader in one day. Let's look at the next type of trader. That is a day trader. Day traders trade inside a trading session or just one day. The idea here is to open a few trades each day and exit these trades by the time the session closes. A day trader will normally start at the beginning of a particular session, identify a few signals, place the trades, and exit them within a few hours. Normally anywhere between 2 to 3, maybe even 4 hours. The next type of trader is a swing trader. Swing traders will hold positions up to a week or more. Swing traders may not trade every day. They may identify trading signals every few days, but when they enter a trade, they are normally in the trade for anything from a few days to a week or even more. You will notice that as you move down the speculator list, the amount of time required for each trade to play out is a lot more. Finally, we have the position traders. Position traders hold on to trades from anywhere between a week to a month, or maybe even 2 months. Position traders, again, do not trade every day. They do not need to look for signals every day. They will normally open a position and hold on to it for a week and probably check on the progress of the trade on a weekly basis. The other type of trader that you have is the investor. Now, investors are very long-term traders. Trades can last from anywhere between a month to several years. A lot of investors are made up of traders that use fundamental analysis. Speculators are made up predominantly of technical traders. The reason for that is because speculators use smaller time frames, and smaller time frames rely heavily on the use of charts to make trading decisions. So those are the different types of traders out there. By knowing the different types of traders and the different durations of their trades, this will help you identify the type of trader that you'd like to be. That's all for this video. Thank you for watching. I'll see you in the next one.